Hey guys, this is Danielle with Watermark Partners Real Estate, and we are driving back from Fayetteville, where we just closed on a property and visited a couple of our other assets. And while we are headed back to Charleston and putting in the miles, we thought we would have a quick conversation about portfolio investment strategies.
So as we are deploying the capital for Sunbelt Fund 1, we're constantly debating within the team the merits of geographic diversification versus geographic concentration and operating scale in a given city. Naturally, a lot of the deals that we look at are driven by the market. Some markets are hotter than others. It's often the nature of what assets are available. But within those constraints, we are able to determine a greater focus on geographic concentration and therefore operating scale in that location versus a broader spread across our 3 states that we're investing in this fund, namely North Carolina, South Carolina, and Georgia. So Danielle, could you tell our investors and friends a little bit about why operating scale is important?
Right, Tom. So some of the difficulties in such a large region that we have to cover is operational efficiency. So part of what gives us better performance is being able to pool our resources. So for example, having properties that are 4 hours apart make it really difficult for managers to communicate, for us to scale with maintenance teams, construction, renovations. A lot of those things work out really well when, for example, in Fayetteville, our goal is to pool 3, 4, 5 assets within 30 minutes of each other, so that then you can have a maintenance supervisor that's going to oversee renovation projects in that area. You get more hands-on attention at each property, and you also get to build efficiencies in some of our maintenance, marketing, local vendor support, so we're able to get better discounts because we're doing a lot more in one local area. So it just helps us for sure in the operations capacity, and it just makes it easier to manage properties. But then we spread out those smaller areas into the larger states.
So though geographic diversification is obvious in that it is risk reducing, in fact, over diversification in a fund of our size, though a sizable fund, over diversification spreads us too thin on the ground operationally to effectively manage the assets. As a result, our focus is a few hub cities here in the southeast to get that operational scale. Thanks for listening. We appreciate your investment, we appreciate your interest, and we will see you again soon.